Hi, I welcome you to this learning session on IFRS 15. In this video, we will have a discussion on full retrospective application of IFRS 15. Let's go. The learning outcomes. After completing this video, you will have an understanding about the full retrospective approach of IFRS 15. We have discussed earlier that there are two approaches, full retrospective and the modified approach. So we will drill down in detail what do you mean by full retrospective approach and how we can apply it with an example. The practical experience available. We discussed practical experience are some practical exemptions which is available under the standard in order to facilitate any practical issues in implication of the IFRS. And the third point we will discuss is the disclosure requirements if we apply any practical experience. So this video will base on these three areas or subjects. Now let's understand the full retrospective approach through an example. I've already discussed this thing in my previous video, but I just want to reiterate the entire process. So this is the timeline and this is the initial date of transition. The date on which we applied this standard is 1st January 2018 as required by the IFRS 15. So as per the full retrospective approach, you need to follow IAS 8, which means in order to apply full retrospective approach, you need to comply with all the requirements that are related to the IAS 8. Now, why IAS 8? So when we have a change in the accounting standard, it changes the accounting policies. So always remember the standard comprises accounting policies and IAS 8 deals with the changes in accounting policy, which means if you change any accounting policy, how you need to record it in the financial statements and how we can record the financial impact. So when you apply full retrospective approach, you need to think about IAS 8. And IAS 8 says you need to apply that standard retrospectively since the date of its inception, which means you need to assume that IFRS 8 15's requirements are there since its inception, which means that there was no IAS 18, there were no IAS 11. IFRS 15 was in the existence retrospectively, which means there was only IFRS 15. There was no IAS 18, no IAS 11. Now you need to revalue all the contracts based on the requirement of IFRS 15. So you need to revalue the financial impacts of all the contracts that you have entered. It's not for the past year, not for the 2 years before, for all the contracts since the entity's inception, and apply the provisions of IFRS 15 and inspect if there is a difference between the IFRS 15's accounting policy or IFRS. By applying IFRS 15, you may arrive at certain figure and versus your IAS 18's applications and whatever the figure you have arrived. And you need to see whether there is any difference. If you have a difference, then you need to make the adjustment in the financial statements. Now, this means full retrospective approach. And and when we apply full retrospective approach, there comes with a lot of practical challenges because sometimes it gets very difficult to apply such a requirement since the date of its inception. It's very costly, and sometimes we may not be able to get the desired result. Hence, hence the board come up with a practical experience. So practical experience are nothing but some level of practical exceptions which are provided by the IASP. If you have any practical difficulty in applying these requirements, then you need to follow the practical experience or what we call as a practical exceptions. So we will discuss all the practical exceptions in this video right now. Now, there were four practical experience in total in respect of when we apply when we apply a full retrospective approach. So let's discuss on the first practical expedient, that is, for completed contracts, an entity need not to restate the contracts. They do not need to restate the contract. Here, restate means the application of IFRS 15 requirements. They don't need to restate the contracts if it begins and ends with the same annual reporting period or completed contract at the beginning of the earliest period presented. So I'm going to decode this requirement, why it came up. The first of all, I've discussed in my previous video that what do you mean by completed contracts. So completed contracts are basically in which the seller has performed its obligation. Its obligation is done. Obligation is performed. It do not suppose you need to deliver some goods and you have delivered the goods. So it's a completed contract within the meaning of IFRS 15. It's a completed contract within the meaning of IFRS 15 that the seller has performed its obligation, what it is required to do. That's it. So I would just want to discuss one important point that only relevant and material information is required to be presented in the financial statements. Only relevant and material information. For those contracts that begin and end in the same annual reporting period, these are very small contracts which do not have any complexity associated with revenue recognition. So why are we gonna waste our time in evaluating these contracts? These are really small contracts. So we do not evaluate in those aspects. And in respect of the second part, any completed contract at the beginning of the earliest period presented. So this is primarily a practical leeway provided by the IASB that sometimes we may get difficulty in evaluating all the contracts. Now let's have a discussion on what do you mean by earliest period presented. I think it's very much important to understand the concept because it's repetitive all across these IFRS 15 standard. Suppose you apply the standard on 1st January 2018. This is the initial date of application of IFRS 15. And suppose you follow a 12-month year end. So your year end would be on 31st December 2018. Now, as you know, when we prepare financial statement, we need to prepare the statement for the comparatives as well, that is for the prior period. So basically when we talk about the requirement of the IFRS, suppose you are presenting financial statement for 2018, you need to prepare the comparative for 2017 as well in respect of profit and loss, balance sheet, maybe statement changes in equity or cash flows for any of the requirement, for any of the financial statement requirement. So if your period is this, if this is your current year, then your prior year would be beginning from 1st January 2017 to 31st December 2017. So the earliest at the beginning, this is the earliest period. This is the prior year. This is the earliest period. This is the earliest period, and at the beginning, on this date, all the completed contracts on this date are need not to be restated if you wish to apply the practical expedient number one. So this concept is decoded in this way, which means our completed contracts at the beginning of the earliest period presented, earliest period. And at the beginning, for all the completed contracts here, you may have the option to not to apply the requirement of IFRS 15.